The Federal Reserve is going to flip. I have all the details and what to watch for right here in the video, so let's get right into it. All right, now if you've been watching the Federal Reserve here over the last several months, you've seen them coming out of their FOMC meetings aggressively raising interest rates with hopes of bringing down some of this inflation. However, their efforts have been completely 100% worthless because it's done nothing to this inflation, which yet again was just confirmed by the most recent CPI inflation data release, showing that inflation is still running at 9.1%, which is very, very high and also very concerning for the Federal Reserve, who continues to raise interest rates, and obviously it is not doing anything to this inflation quite yet. So in this video, I want to go out and talk about their next meeting here on the 27th, and then of course I do want to talk about their meeting out in mid-September as well, and what is anticipated as of right now according to the reports, and what is actually anticipated by most investors as well as analysts, experts, and everybody watching this right now as far as what the Federal Reserve is going to do, and of course how they're going to flip going forward. So let's get into it and talk about their upcoming policies. So first off, I quickly want to fast forward out to their meeting that's going to be concluding on the 27th. At that point, we're going to get the chairman of the Federal Reserve, Jerome Powell, to come out and talk about what they've discussed over their two-day meeting and what they're going to be doing with interest rates. Now, as of just today, I just saw a report this morning that is showing the likelihood of a 100 basis point interest rate hike on their next meeting here on the 27th is at 83%. So that's very high. It is almost 100% that they're probably going 100 basis points or 1 full percentage point with their next meeting here that's going to conclude on the 27th. That's going to be incredibly high, right? Just remember, their last meeting here in mid-June, they raised rates by 75 basis points. That was the biggest hike that they've seen in 28 years since 1994, right? So this would be incredible if they actually do raise rates by 100 basis points. Well, first off, they might actually be in line with what they need to be doing if they actually want to get ahead of this inflation. Here's the problem. This Federal Reserve is so scared of their shadow, it's obviously, it's honestly embarrassing. It's embarrassing that they can't even stand up and do what they're supposed to be doing right now because this is their job, right? They're not even doing their job right? So anyway, it's kind of interesting that all of us need to be here coaching the Federal Reserve on what they need to do. These are supposed to be like PhDs. These are supposed to be very smart economists that have a clue of what they're doing, but apparently they're too scared to do anything here. But anyway, they need to come out and start aggressively raising interest rates above and beyond 50 basis points, 75 basis points, if they actually want to get ahead of this inflation. So we'll have to see what actually happens here with their next meeting here in a matter of just days to see, will they actually raise 100 basis points, or are they going to get scared once again and say, no, we don't want to do that? Here's the problem, though, and I guess it depends on how you look at this, because if you're an opportunist, you're going to look at this and say, what's the problem? I don't see any problem here. If they come out and raise interest rates 100 basis points, and if they continue to raise aggressively here over their next few meetings, this is almost a reassuring, pretty much a big crash coming into the stock market. But again, like I said, that's a problem. Or if you're an opportunist, you're going to say, I don't see a problem. I only see opportunities. You're right. There's going to be some massive opportunities ahead of us, especially as they try to bring in some of this inflation, and they're going to manufacture a nice big crash here. But again, it's also going to be met by a nice massive rally after that. So depends on how you look at the situation. And again, I want to talk about all that in further detail in other videos, because there are setting up for some amazing opportunities here. There's some upon us right now, but there's going to be even greater opportunities coming up here. But anyway, let's keep talking about this, because we already know with their next meeting here in a matter of just days on the 27th, of course, we already know that it's probably going to be anywhere between 75 basis points and maybe even 100 basis points, but we'll have to see on that one. However, here's where the Fed is likely going to flip on this. So over the last several weeks here and the last few days even, I've been seeing some reports coming out saying it's likely that the Fed will slow down their interest rate hikes, possibly even come in for a pause in September. Now, actually, I talked about that in one of my previous videos here, maybe, a week or so ago. I came out and I talked about it and I said, I wouldn't be shocked at all to see the Federal Reserve come in, slow down their interest rate hikes, and or even come in for a pause in September. However, I'm going to walk that one back. I don't think that's happening anymore. Here's why. This inflation is so incredibly hot right now. Everybody was anticipating inflation was going to come in at like 8.8%, 8.9% maybe. And here we blew it out of the water once again at 9.1%. This is nuts. The Federal Reserve is doing jack when it comes to lowering all this inflation right now. So they got to get on this thing and get ahead of this because it's going to continue going on. This inflation has no intentions of slowing down with the current trajectory that it's on right now. As a result of that, they got to get ahead of it, right? So by doing that, again, they want to continue raising interest rates because this seems to be like one of the only tools that they have in their toolbox, even though they claim to have a whole big mechanics toolbox with all these different tools that they can deploy. Doesn't really seem like it to me, because if that's the case, then why aren't they doing it, right? So anyway, this is what's going forward. So in that video that I put out maybe like a week or so ago, in that video I said I wouldn't be shocked to see the Fed come in, slow down their policy here as in raising rates, and possibly come in for a pause. Again, I'm going to walk that one back and I'm going to say I don't think that's happening anymore. I think they're going to charge ahead and they're still going to be relatively aggressive. Even if they do 100 basis points this coming meeting on the 27th, I still think they're going to tame it down a little bit and go down to probably 75 basis points next meeting. I do not think they're going to go down for a pause. I do not think they're going to come in for 25 basis points or even 50 basis point raise in rates on this next one in September. I think they're probably going to stay strong at probably 75. Even though they realistically probably should be going with another 100 or possibly, somewhere around that range. I don't think they're going to go above 100 because, I just don't think that they're going to. They're too scared to even do 100 at this point. There's just no way that they're going to do anything more than that. But it should be interesting to see what happens. Now, again, I want to point this out because I do also believe at some point, it all depends on these inflation numbers and what happens here. But I think what's going to happen is the Fed is going to come out. They're going to start tiptoeing out into, out on a limb here. And they're going to say, okay, one time, 100 basis points, done. We got it. And now we can walk back, right? Inflation's going to drop down to 2%, which is our focus. And we're all going to be good to go. We can sail off into the sunset and we're all fine and dandy, right? No, that's not how it's going to work. It's going to be a very slow road to go down. It's going to take a very long time. It's not going to be a matter of raising rates at 100 basis points one time and then all of a sudden coming back and say, great, inflation is fixed. We're all happy now. Prices have come back down to earth and we're all good to go. Nope, that's not how it's going to work. It's a very, very slow process. It takes a very long time. In fact, just the other day in one of my videos, I used a train analogy, right? So you got a train screaming down the tracks at 60. Can you just flip a button and all of a sudden the train stops? No, not at all. That thing needs to slow down very gradually over long distances because it has so much momentum behind it. The same thing goes with inflation right now. It is so hot. It has so much momentum behind it. It's going to take a long time to slow this down. They haven't even slowed it down yet, right? So you know how like when you throw a ball up in the air, you throw the ball straight up, and then it pauses for like a fraction of a second where it literally stands still in midair before it reverses and goes back down? The same thing has to happen with inflation. It hasn't even stopped yet. The trajectory is still higher at this point with this inflation. We need probably at least a period of time for the momentum to stop for a very fractional period of time and then all of a sudden reverse the other direction. But we also do know this much as well. The Federal Reserve can come in very, very fast. So here's the thing that I want to point out to you. The Federal Reserve is very scared that they're going to come in and crash the market. Yeah, we already know that. That's okay. Don't worry about it. It'll come back. Seriously, don't worry about it. The Federal Reserve should not worry about the stock market being crashed. They should not worry about the economy. They're going to do it no matter what. Just get it over with. It's like the Band-Aid, right? Just rip it off already. It hurts way less if you just rip it off really fast versus sitting there picking around at it, slowly peeling it off. Dude, just rip the thing off already. You'll be fine. It'll hurt for like a second and you'll be totally good to go. I promise. I've done it. I think we've all done it, right? The worst pain in the world is sitting there picking away at it and it does nothing other than just hurt for a long time. Just pull fast. It'll go, right? So the whole fact is, when it comes down to it, and the Federal Reserve, if they crash the economy, which they're going to, if they crash the stock market, which they're going to, if they crash the crypto and the real estate market, which they're going to, it's okay because here's what we know and here's what we learned from 2020 and 2021. Well, practically we learned this much since basically 2008, since the last major financial crisis. Here's what we do know. The Federal Reserve can reverse policy very, very fast, and they can print a ton of money really fast. They can do that very, very fast. Well, what do they do when the economy is suffering from a recession? Well, they come in and they lower interest rates very aggressively, and then they start printing money, which they call quantitative easing. They call Operation Twist. They call all these different fun, fancy names, but it's all the same thing for literally just printing money, okay? So that's all that they do. And we know that the Federal Reserve can print a lot of money really, really fast, and we also know that they can distribute that money very, very fast into the economy and once again pump it up. We also do know that they can pump up the stock market very, very fast as well. And we've seen it happen. If you don't believe me, look back to early 2020 when all of a sudden the market was falling off a cliff, and then all of a sudden the Fed stepped in and printed a whole bunch of money, trillions of dollars, and what happened? You saw a massive V-shape in the stock market, and the thing took off like a rocket, right? So we know that the Federal Reserve can do this. They've demonstrated this many times. So if they're scared to raise rates, if they're scared to break down the economy, if they're scared to bring down the stock market, who cares? Suck it up and get it over with already. All they're doing is they're prolonging the pain with all of this inflation. They're prolonging everything by not doing the necessary policies that they need to right now. I can't believe it that us people, we need to be here as not even economists, as not even PhDs. We need to be here coaching like 100 economists in the Fed. Honestly, there's a lot of economists. I don't even know what the real number is as far as how many economists are in the Fed. I just know that it's a lot. And it's unfortunate that all of us are the ones sitting here coaching them on what to do with their policies, their interest rates. They know that they can do this. They can literally flip policy immediately, print a ton of money, plow it into the economy, and they can bring this thing right back up if they wanted to. Yes, it'd be artificial, but at the end of the day, artificial is better than no official, right? So anyway, I wanted to point that out. I don't even know, is no official a thing? You know what my point is, right? Artificial is still a thing. So anyway, I wanted to point this out for you and let you know I'm reversing what I said about a week ago in that separate video talking about the Federal Reserve likely coming in for a pause in September. There's no way. With this inflation coming at the rate that it is right now, unless something really dramatically happens here over the next few CPI readings, there's no way that the Fed is going to pause in September. If they do, they're probably going to drop the ball big time. So they can't do that. They got to continue charging ahead. I know it's going to hurt. I know it's going to be painful, but you got to get it over with. So anyway, that's kind of the message behind it. So I do think that the Fed will probably come in for a pause and or a very slowdown here, probably sooner than later, but I don't think it's going to be September quite yet. I think they're probably going to push it out another meeting or two until they actually bring in something like that. But again, we'll have to assess the economy, assess the stock market, assess everything else going on out there, and see how bad are we really getting whacked before they really determine what's going to happen going forward. Anyway, hope this video helps you out to give you a better glimpse into what's going on, but the Federal Reserve is kind of scared of their shadow at this point, right? But anyway, they got to do something here. It's their duty. That's what they're supposed to do as the Fed. So anyway, I'll keep you posted as I do get more details on all of this. And of course, as anything comes in on the stock market, stocks, investing, real estate, crypto, any opportunities like this, of course, I'll be right back here for you, laying it all out and what opportunities are on the table for us. So hope you're having a nice day so far. Thanks again for watching this. Please make sure to subscribe down below. It's totally free to do so. Share the video and go back and check out some of the other thousands of videos right here on the channel. Until next time, stay safe out there. Enjoy. Do your research now so you can be ready for the opportunities as they present themselves. And I'll catch you again later in the next